Great. Thanks a lot, Eric. My name is Brandon Toner. I'm the director of the Office of Small Business Partnerships. We partner with communities to support the growth and success of Minnesota's entrepreneurs, and we are here today to talk about the Main Street COVID Relief Grant Program. This program will provide grants to businesses that are impacted by the COVID-19 pandemic, and we're going to provide an overview of the program. We're going to discuss eligibility requirements, funding, the application itself, resources for completing the application, and then we'll have a Q&A at the end of the session. So for program overview, this program will provide $64.2 million in grants for Minnesota-owned and operated businesses that can demonstrate financial hardship due to the COVID-19 pandemic. Grants amounts will be between $10,000 and $25,000 based on the number of full-time equivalent employees on staff. Applications will be reviewed and randomly selected by the state, and then grants will be administered by local and regionally based nonprofit agencies. So online applications will be accepted from September 20th to September 29th. The application will be on our website. They'll be linked on our program page. We'll provide the link to the program page at the end of this presentation, and that will be published around 10 a.m. on September 20th, and then September 29th, the application will close by midnight of that day. Applications will be selected through a randomized selection process, and then applications selected for consideration will be notified in October, and then grants will be dispersed between late October 2021 and June 2022. We'll talk a little bit about that application process, selection process later in the presentation. So who is eligible for this program? This is for businesses or nonprofit organizations, and by nonprofit organizations, we mean nonprofit organizations that earn revenue in similar ways to a business. With primary operations located in Minnesota, they must be at least 50% owned by one or more residents of Minnesota and employ the equivalent of 200 full-time workers or fewer. They must have minimum total sales of revenue of at least $10,000 for their 2020 or 2019 tax year. And then they must demonstrate financial hardship due to the COVID-19 outbreak and are currently operating and have plans to continue operating. It includes the following types of businesses. This includes sole proprietorships, independent contractors, businesses without a permanent physical location, home-based businesses, and businesses with no employees besides the owner. Now, a business to be eligible needs to show financial hardship. And what we mean in financial hardship has two definitions that a business can fall under. The business was directly restricted by an executive order to reduce the spread of COVID-19, or they experienced a 10% decrease in annual revenue between 2019 and 2020. Now, there's a special case. For businesses that started in 2020, they can qualify for financial hardship if they were directly restricted by an executive order. So this financial hardship piece is a very detailed piece, so I'm going to spend the next couple slides going in great detail about financial hardship. So when we talk about executive orders, what executive orders are we talking about that directly restricted businesses? I'm not going to read this long list, but if you're a bar owner or a hair salon owner, you know that you were restricted by one of these executive orders at some point throughout the course of 2020, and no doubt experienced financial hardship due to that. And so you should be familiar with these executive orders and which ones may apply to your business. What was the effect of these executive orders, and why is this program targeting those businesses directly restricted or indirectly impacted? Some businesses were directly restricted by an executive order to reduce the spread of COVID-19. A lot of these businesses typically require customers to be physically present to receive goods or services, and they were non-critical sector businesses. So, for example, like a grocery store was defined as a critical sector business, and so wasn't directly restricted by an executive order and could operate at full capacity. But almost all businesses were indirectly impacted by an executive orders related to the COVID-19 impact. So, for example, critical sector businesses like grocery stores, auto shops, businesses that don't typically require customers to be physically present, like online retail, or businesses whose supply chain includes businesses directly restricted by an executive order. So what are some examples of indirect impacts from executive orders? So, for example, a direct restriction, a bar or restaurant that cannot operate above 50% capacity due to Executive Order 2056. Well, an indirect impact that may produce financial hardship for that business and make them eligible for this program would be a restaurant supply company that experienced a reduction in orders from their customers, or a direct restriction on a dental or medical office that was restricted by EO 2009. It can only provide emergency dental or medical services. An indirect impact related to that could be a medical transportation business that had a reduction in customers transporting elderly patients from, for example, a nursing home or assisted living facility to their appointments. If those appointments were restricted, they saw less customers and generated less revenue for their business. And so they may fall under and they may qualify for financial hardship. Or an organization that organizes youth sport leagues and restricted by EO 2020 from hosting practices or events. Indirect impact would be an apparel or equipment manufacturer whose orders for jerseys or balls were canceled or reduced. So, who is not eligible? Who is not eligible are those businesses that are majority ownership of the business is owned by one or more residents outside of Minnesota, or nonprofit organization that does not earn revenue in similar ways to business, or business that started operating after December 31st, 2020, or business that had less than $10,000 in revenue per year for each 2019 and 2020, or cannot demonstrate financial hardship due to COVID-19 outbreak and are not currently operating or plan to close soon. So, aside from whether or not an applicant is eligible, certain applications based on certain criteria will be prioritized in the randomized selection process ahead of others. So priority will be given to businesses that did not receive assistance from one or more of the following state programs. The Small Business Emergency Loan Program, which came out in March of 2020, the Small Business Relief Grant Program that came out in approximately July 2020, the Movie Theater Convention Center grant that came out later that summer / fall, and the state-funded County Relief Grant Program. Now, there's a number of other programs that businesses may have been eligible for, applied for, received grants for. This includes, private grants from private businesses. Facebook had a grant program, for example. Your state or local county programs, or even federal programs like EIDL or the Paycheck Protection Program. That doesn't factor in terms of the prioritization piece. We're just looking at these 4 state programs by law. And another point of clarification is if you received all 4, that doesn't make you any less a priority than anybody who just received 1 in terms of the prioritization piece. However, it may impact whether or not you qualify for financial hardship. We'll talk about that in a second. If a business received a grant from one of these, once again, if a business received a grant from one of these programs, they are still eligible to apply to be considered for an award. There's also another layer of prioritization based on geography and the business owner characteristics. So based on geography, 50% of the funds will be available for businesses based in Greater Minnesota, and 50% of the funds will be available for businesses based in the 7-county metro. In addition, a minimum of $18 million will be awarded for businesses with 6 full-time workers or less, and a minimum of $10 million will be awarded for Black, Indigenous, and people of color owned businesses, $2.4 million for businesses that are majority owned and operated by women, and $2.5 million for businesses that are majority owned and operated by veterans. Once again, those are minimums. And in fact, the last time we did this for small business relief grants with very similar characteristics, we exceeded all these numbers. So what can funds be used for? So the funds can be used for working capital to support the business. That includes payroll expenses, rent, mortgage payment, utility bills, and other similar expenses that occur or have incurred since March 1st, 2020 in the regular course of business. You may have some questions about, well, what about this cost or what about that cost? I encourage you to take a look at our FAQ, which goes into greater detail on some of the costs that you may be interested in whether or not can be paid for with this. So now I'm going to transition to talking about the application selection, review, and award process, and then even go into a preview of the application itself. So between September 20th and 29th, you'll apply online at the following link. I'll read it out, https mn.gov/deed, DEED/MSCRG. All applications will be reviewed for completeness and validity. Complete and valid applications will proceed to the randomized selection process. And then selected applicants will be notified that their application has been randomly selected for consideration. Then applications will be assigned to one of the nonprofit administrators, and then applications will be reviewed and confirmed to be eligible. And then administrators will email applicants that they have been approved for a grant and will request applicants sign an award acceptance agreement. Then the applicants will sign the award acceptance agreement, then receive the proceeds of the grant. This process usually takes 2 to 3 weeks once you've been notified, depending on how quickly you can get back those agreements. So these are the organizations that will be administering these grants. So if you are assigned to one of these, if your application is assigned to one of these organizations, know that they're highly qualified and excellent organizations that will be able to get you through the entire process. But just note that they are not the ones receiving the applications. They are not the ones doing the selections. They are the ones that are just confirming whether or not your application is eligible based on the information and the documents you provide in your application. So what is this application going to look like? So eligibility questions on the grant application include who owns the business, is the owner a resident of Minnesota, where's the business located, what was your business revenue in 2020, what was your business directly restricted by executive orders related to COVID-19, and there's a number of other questions, that's not all the questions. And then you'll be asked to upload documents that verify the information that you provided in your application. So for example, documents that verify that you're in fact a resident of Minnesota, such as a driver's license, state issued ID, or any number of other documents. So now I'm going to provide a quick overview of what the application is going to look like. Now, a caveat, some of the features on here may change, but this is pretty close to final of what you'll see. So this should be very familiar with you when you click on that link starting September 20th and start to fill out your application. So there's 5 basic steps. And the first step is to sign up. You'll go to the application portal and you will need a correct email address unique to you or your business. I want to emphasize and underline multiple times that you will need a correct email address. If you input an incorrect email address and if you misspell it, we will have no way of getting a hold of you to let you know, the status of your application or whether or not it'll progress. So it's very important that you input a correct email address. And in fact, in the application, we ask you about 3 or 4 times what your email address is, just to make sure so that we can contact you. We don't want your application to get lost. And if you're ineligible, we want to make sure that we can get you this grant. It is not recommended to use a mobile device, and it is recommended using the freely available Chrome browser. So it's optimized visually and that it works and all the features work well for you. So you'll sign up. After you sign up, you'll create a profile. It's important to note that your profile is not your application. This is just information that tells us who you are, what your business is, and that's attached to your actual application. You will have to input some information twice in your profile and your application. Apologize for the inconvenience, but this is just to make sure that everything flows well and everything's accurate and that we can process your application quickly. So you'll create a profile, and your profile will include your business name, your name, some basic details. And then after you create your profile, I should back up a second. So when you create your profile, you'll receive a confirmation email. Make sure you get that confirmation email. It's very important that you, once again, have a correct email and that the emails that you're receiving from our system are not going to your spam filter. So please confirm that you're receiving that. And if you're not receiving it, you may have entered the email incorrectly, or there's something wrong with your inbox. So you may want to consider creating a new email or figuring something out. Talk to your technology provider and get that resolved. But make sure you're getting those emails. And if you are getting those emails, you are all set. And I would encourage you to progress through the application process. And so, yeah, step 3, start your application. So once you have your profile created, you'll start your application. And a couple clicks through, and then you'll get through to the application form itself. And it's about 20-ish questions. And you'll go through and fill that application out. And it's important to note here that you can start, stop, save, and return to your application anytime during the application window. So I would encourage everybody, start your application, get your profile created on day 1, and then take as much time as you need up until the deadline to get all your information in there. You're probably going to be working through your regular application and you realize, oh, I don't have that document or I don't have that information. That's fine. You can save it. You can go get that information and get that inputted. And I'll also note at this point that it doesn't matter as long as you submit your application during the application window. It doesn't matter when you submit your application as it relates to your odds of being selected. This isn't a waiting list. This isn't a line. It is a randomized selection process. So even if you're the first one to get your application in, it does not impact your odds. If you're the last person to get your application in, it does not impact your odds. So take your time, but not too much time. Make sure you get it in. So completing the application. Step 4 is uploading required documents. So there'll be a number of documents that you'll be required to upload to verify the information you provided in your application. It's important to note you can only upload 1 file per field. Files can be as many pages as needed, but for example, if you're taking photos of a tax form and you have 6 photos of 6 different pages, you're only going to be able to upload 1 of those. So you need to use something that will consolidate all those images into a file. I recommend, if you don't have ready access to a scanner, but you have a smartphone, an app I use all the time is Genius Scan, but there's any number of free or low-cost apps that can scan your documents, put them in one document, and then you can email them to yourself, and then you can upload them to this form. There's any number of ways of tackling this issue. The file can be in any image or document format, such as PNG, PDF, or JPEG, but considering what I just said, I highly recommend PDF. We know it'll work, and you won't have any issues. And then completing the application. So then you will, once you complete your application, you upload your documents, then you will mark your application as complete. And no doubt, you'll hit that mark complete button and you'll miss something. And it'll say, oh, you're missing 1 item or 2 items or 3 items. And the system will walk you through and show you which items you're missing. And then you complete those items and then hit mark complete, and it'll let you know if you've in fact completed the application. And just so you know that when you hit mark complete, that is not, you have not submitted your application yet. It also, you can still edit it. So you hit mark complete, you go to the following screen, which is your profile and your application. And then if you're ready to hit submit, you go ahead and hit submit. If you want to double check your application, you can go back, you can double check it, you can verify it. You can edit it if you need to. And then once again, you go back and mark complete and then submit. I want to also underline this a lot, multiple times, is that please do not forget to hit the green submit button. I know there's going to be at least one person who completes an application. They're fully eligible. They submitted all their documents. They followed all the instructions and they hit mark complete and they forgot to hit the submit button. And I'm going to be, it's going to be 11 o'clock at night. And I'm going to be sitting there looking and hoping that that person hits the submit button. So please don't be that person. Be sure to hit that submit button. That's the only way you'll be able to progress and make sure that your application is submitted. So that's very important. And I don't want anybody to forget that. Now that we had a look at the application itself, I want to address some frequently asked questions. Before we go to the Q&A, these are some common questions that we get over and over again, and I just want to address them They're generally relevant for a lot of people on this call, and so I want to address them right up front. So a couple questions regarding residency. Does resident of Minnesota mean permanent resident of Minnesota or citizen of the United States? So this is pulled straight from Minnesota Statute 290.01, but resident of Minnesota means any individual who's domiciled in Minnesota or is domiciled outside the state, but who maintains a place of abode in the state and spends in the aggregate more than 1/2 of the tax year in Minnesota, unless the individual or spouse of the individual is in the armed services of the United States. The thing is, here is immigration status is not a factor. So that could be important for some folks. So another question, this is related to residency and nonprofits. So for the purposes of the program, businesses and nonprofits are, a nonprofit is considered a business, right? If they meet certain criteria for the purpose of this program. And so how do nonprofits organizations meet the residency requirement? They don't have owners like a for-profit business. Well, for the purpose of this program, you can use the residency of the board of directors of an applicant organization. For example, if 50% or more of the board of directors are residents of Minnesota, then the organization meets the residency requirements of this program. Some more questions related to nonprofits. How can I determine if my nonprofit organization is eligible for this program? So nonprofits that earn revenue on an ongoing basis through a fee-for-service model similar to a for-profit business and whose operations were restricted by an executive order to reduce the spread of COVID-19 are eligible for this grant. This includes nonprofit theaters, concert venues, museums, art organizations, fitness centers, and other organizations that generate revenue on an ongoing basis through a fee-for-service model, once again, such as ticket sales or membership dues that are not tax deductible. Now, what about nonprofit? My organization was not able to sell tickets for our annual fundraiser due to COVID-19. Are we eligible for the program? So let's imagine an organization that's it's like a food shelf organization. They provide food, free food for folks. And they have an annual fundraiser to raise funds for the operations. Well, nonprofits that rely on multiple sources of funding, including annual fundraisers or ticket sales, but do not earn revenue in similar ways to a business, or were not directly restricted by an executive order to reduce the spread of COVID-19, do not meet the definition of eligibility for this program. Some questions on revenue. So I received one or more grants or forgivable loans in 2020. How does that count towards my business's revenue in 2020? So some businesses may have had a situation where their revenues drop, but they receive some grants and they're wondering, how does that impact? Well, generally grants are counted like any other revenue received by the business and are subject to state and federal taxes. However, some financial assistance like paycheck protection loans are treated differently and are not tax deductible. Now, I want to be very clear. If you have further questions on this, you should address this with your professional tax advisor. We are unable to provide tax advice, and applicants should discuss tax liability with their own tax advisors. Another question related to this is my business lost more than 10% of revenue from paying customers during 2020 due to the COVID-19 outbreak compared to 2019. However, I received enough financial assistance to make up the difference. Is my business eligible? If your business was, the answer here is, if your business was not directly restricted by an executive order and you received enough taxable financial assistance to make up for any revenue losses due to the pandemic, your business will not meet the definition, the financial hardship requirement for this program. Now, this gets a little complicated if you start talking about paycheck protection loans. Paycheck protection loans are not taxable. That is a loan. Even if it's forgivable, it's still a loan and it doesn't count as revenue. So you wouldn't have to count that as revenue for the purpose of this program. But if, for example, you received a Minnesota Small Business Relief Grant, that was taxable. And so you received a $10,000 grant that doesn't, your revenue is no longer 10% less than 2019, then you would not meet the financial hardship requirement of this program. Then another question on revenue. Compared to 2019, my business did not see a decrease in revenue compared to 2020. However, my costs increased significantly to a number of factors. How can I show my business faced financial hardship? Now, this program prioritizes businesses that face significant revenue loss when their operations were directly restricted by an executive order. A business that saw revenue increases even while costs increased and whose operations were not directly restricted by an executive order does not meet the definition of eligibility for this program. Here's a couple questions related to self-employed and independent contractors and employee counts, which is also relevant. Question, are self-employed individuals and independent contractors always eligible for this program? We addressed this earlier. Yes. And in terms of employee counts, they will count as a business with one full-time equivalent employee. This is also relevant if you're a business that hires independent contractors. So for example, typically like a hair salon, you have an owner of a hair salon, maybe they're a stylist themselves, and then they rent out seats to independent contractors. Those independent contractors are eligible to apply as their own business. However, and so is the hair salon as their own business. But as it relates to the full-time equivalent count, they cannot count those independent contractors as their employees because they're not their employees, they're independent contractors, and they're on their own eligible for this program. So another question related to employee counts. How is full-time equivalent employee defined and how is that calculated? How are part-time employees counted? So full-time equivalent employee means an employee who works 40 hours or more on average each week. Part-time employees can be counted in one of two ways. There's a hard way and an easy way, and depending on the nature of your business, you may see an advantage or disadvantage in either way, or at least an easier way to do it. So the first method is to calculate the average number of hours paid per week for a part-time employee during the year. So if they average 30 hours a week, that would be a 0.75. And then you have another employee that averages 10 hours a week, that's a 0.25. Those employees together would be 1 FTE. The second method, this is a little bit simpler, is each part-time employee equals 0.5 full-time equivalent employee, whether they paid fewer or more than 20 hours a week. So if you're a seasonal business that employs, let's say, 100 part-time employees, during summer months, it may just be easier for you to just say every single employee is a 0.5 and count it that way. So if you have 100, then that would be 50 employees, right? So that's an easier way to do it. So I believe that is the end of the frequently asked questions. So we have exactly 15 minutes to take questions in the chat, and what I'll do is I'll find questions that are most relevant to the largest group of people here and do my best to answer them. And then for any questions that I can't get to, we'll address in the FAQ. And then Eric, I'm looking for questions to answer. Oh, published. Oh, I'm on the wrong tab here. You can vote on questions that are most relevant to you, and I'll try to address those first, and then I'll go through in order of asking. So this individual asks, when calculating revenue from 2020 compared to 2020, do we deduct PPP, or will receiving PPP disqualify us? So PPP will not factor in your application. Is not a taxable source of revenue, and so shouldn't impact your taxable revenue when you compare 2019 to 2020. For nonprofits, do we have copies of all board member IDs? That's a great question. I hadn't thought of that. You don't have to include all copies of board member IDs. The nonprofit administrators will verify that, and we'll figure out the best way to do that. That seems a little burdensome to be able to have to collect all that. So we'll figure out something. But if there's any issues, just we'll figure that out. All right. This is a great question. So this person asked, what are the qualifications are there for determining whether a nonprofit is female owned or any of the other minimum categories? This is an area where nonprofits, they don't get prioritization based on that. We have to follow the characteristics of the owners, and nonprofits don't have owners. And so we can't follow, we can't apply those prioritization categories to nonprofits. Nonprofits are eligible. That's not to say nonprofits won't get them. They just won't fall under those minimum eligibility criteria. So thanks for raising that question. Another individual asks, and my colleague Margarita has addressed this, but I'll read it out loud because it's got some attention here. Sorry, the questions are jumping around a little bit. So David asks, I have a question about the definition of financial hardship as listed in your FAQ. Financial hardship is defined as follows. Are there any considerations made for folks who open up their business in the middle of 2019? Are there alternative ways to demonstrate financial distress, like in various other federal programs? So yes, we addressed this earlier. No doubt, your question was asked a little earlier, but we addressed this. That if your business was directly restricted from operating at full capacity by any executive order, you would qualify automatically, regardless of your revenue. So if you're not able to show the 10% drop, or you started in 2020, as long as you can demonstrate that you were directly restricted from operating by an executive order, you will qualify. What is the rationale for limiting it to one application business for the same owner? So while $64 million sounds like a lot of money, there's approximately 500,000 businesses in Minnesota, of which a significant portion of them are eligible. And so this program is really targeting those to make sure that those who had not received previous assistance in previous programs are able to get some compensation, some kind of assistance for the impacts that they've experienced due to COVID-19. So that's why we have to limit it for one application business from the same owner, recognizing that some owners they'll have multiple businesses. You'll have to decide which business experienced the most hardship and needs those funds the most. If the hardship was experienced in 2021 versus 2020, and the business did receive PPP, would they be eligible? They will have to show hardship compared 2019 to 2020. That's not to say that we're still not experiencing the impacts due to COVID and even executive orders, but they will have to show that 2019 to 2020. That's when most of the executive orders that impacted the most amount of businesses were in effect. So if your business was directly restricted in 2020, but you didn't experience any hardships except in 2021, you'd still technically qualify. Do your qualifications allow you to compare 2020 to 2021 gross sales? No. Let's see here. If I can find some additional questions with the time that we have. This individual asks, I'm not paying myself, but work 40 hours. Am I considered an F1 FTE? I assume you're an owner of a business, either as an independent contractor or self-employed, or you own a business and you have a large number of employees and you don't pay yourself. Yes, you'd be considered an FTE. The owner can count themselves an FTE if they're an active manager of the business, as opposed to a passive investor in the business. Good question. Does a rental property qualify as a business? So this is a tricky one. If it is a passive investment business, it does not. If it is actively managed, so if it's a property management company that also owns the property and was impacted and experienced financial hardship, you could qualify for this program. But if it's just you can imagine like a family trust that owns investment properties but doesn't actively manage and hires that out, that wouldn't qualify. Good question. Are FTE counted as of today or as of what date? So this is an interesting question, and it's hard to come down on a firm guidance on this because so many businesses are different than others. So for example, if you're a seasonal business, which do you count on your off season or your high season? Well, for those businesses, we'd want them to count on their high season. So because that actually reflects the total FTEs and the average hours that they employ people throughout the year. So fill out the application, and basically you can choose to use either the average of 2020 or your current FTE. We don't want you to be penalized in your FTE count because you experience financial hardship. So, yeah, I hope that answers your question. As a single member LLC, I don't pay salary to myself, but instead do an owner's withdrawal. Can I use the funds to pay this way? Yes. When looking at revenue numbers, what revenue numbers are we to compare? Tax returns, PL gross, or PL net? Your total revenue, total receipts, money coming in, that can also include grants. Can we get a specific list of documents that will need to be uploaded? We will publish a specific list on the FAQ. We addressed it earlier. That wasn't a complete list, so we'll get that on the FAQ. Thanks for that question. Will the business be able to skip adding 2019 tax returns proof of business existence if they open in 2020 and prove hardship direct impact of COVID-19? Yes. If the business started in 2020 and, for example, like a hair salon or a brewery, they'd be able to demonstrate financial hardship due to being directly restricted. If we are an independent contractor with 1099s, do we put our name in the business name section? Great question. Thanks for addressing this. So if you're an independent contractor and you just operate under your own name, you don't have like an LLC or an assumed name or anything like that, yes, your business name is your name. And so please just use your name as such. You are not required, sole proprietors are not required to be registered with the Secretary of State. They can operate under their own name as long as they're not operating under an assumed name. So if you're operating under an assumed name, so for example, I always like a lawn service. If you're operating a lawn service and the side of the truck says, Brandon's Lawn Service, and you're operating and you're presenting yourself to the public under an assumed name and that is not registered, you ought to get that registered. But otherwise, if you're just operating, Brandon Toner's Lawn Service, your name is in the business, you should be fine. So just use your name in your application as the name of the business. What if we expect a decline in revenue during only one quarter in 2020 versus 2019? Well, if that one quarter is equivalent to 10% of your annual revenue, then you qualify, but if it's only 10% within the quarter, you may not qualify. But it has to be the 10% loss over the entire year. Does receiving a Main Street COVID relief grant impact one's eligibility for other deep grant programs? I'm not sure what other grant programs may be relevant there. There's nothing within this program requirements that would impact your eligibility for another program, but you'd have to look at the other program requirements. There may be impacts, but I don't know what specific program you may be talking about, so I don't want to misstate anything. So you'd have to look at the provisions of the specific program, the other specific program that you may be referencing. Looking for new questions. Let's see, I own and operate two lodging properties that are two separate legal entities. Both properties can show hardship. Can I only apply for one of the properties? Yes. So oftentimes a business you may have one LLC with multiple locations. That would be one business. We're looking at the legal entity of the business. And so if you own multiple businesses, separate legal entities, and separate locations, each of those is considered one business each, and so you can apply for one on behalf of one of those businesses. Ruby asks, I have a business specific question. We are a NEMT transport. Not sure what that is. We are directly affected by an executive order restricting all medical appointments to emergency only. So we're directly affected for a certain time. However, we were able to secure a separate grant contract for COVID positive transport later in the year for specific transport outside of regular operations. Our revenue is skewed due to this. So it sounds like you might have been indirectly impacted in that your transportation business relied on customers and businesses that were directly restricted. And so you're indirectly impacted by your lack of customers. And then other business opportunities presented themselves. And so that may have made up for the lost revenue. I don't know. But the bottom line is it sounds like you would be an indirectly impacted business. And so then you have to demonstrate that 10% loss in revenue. If you can't demonstrate, if you actually were equal to your 2019 revenue or even exceeded your 2019 revenues, you wouldn't qualify for the financial hardship requirement. We are a tax preparation office and had to shut down since we meet clients in our office. Does this qualify us under the executive order? I can't speak to the specific specific impacts for tax preparation offices. I suspect that might have been considered a critical business and was not restricted directly. But please, review, take a look at the executive orders. You obviously know what impacted you better than I could. And so if you were directly restricted from an executive order, you would meet that qualification. However, there are some businesses that were not directly restricted and could operate remotely. You might be indirectly impacted. Once again, you have to show that 10% financial hardship requirement. And then we have 1 more minute. And so I'll check to see the vote list and see if there's any high priority questions that I missed. This is a really good question. So how does unemployment affect eligibility? How does pandemic unemployment affect eligibility? So if you're an independent contractor, small business owner, single member LLC, a number of various business types, you may have received pandemic unemployment assistance. Pandemic unemployment assistance would be considered like a revenue to the business. And so if you pay yourself through owner's what we call owner's withdrawal, and you look at 2019 compared to 2020 plus your pandemic unemployment assistance, you may not have that 10% decrease. Or if you did, you qualify for financial hardship. If you're a directly restricted business, it doesn't matter. You would automatically qualify. Are nonprofits incorporated as last question? Are nonprofits incorporated as a 501c6 eligible, such as chambers of commerce? You have to go back to the definition of do they operate like a business? And so that's a question I'm not going to address here. That is going to take a little bit more time than we have, and so I'll address that in the FAQ. And then you can always go back to the email address on the screen and send us that question, and it will be addressed in the FAQ before the application opens. All right, with that, we are at time. Thank you so much for the excellent questions. I think a lot of people benefited from you asking them, and hopefully benefited from me being able to answer some of those. And so with that, we will have another session coming up on the 20th. So if you want to join, it'll be the same content, though we may get some new questions, so you could potentially benefit from pieces there, but we will try to have as many questions answered as possible prior to the 20th, but we will continue taking questions and answering questions as much as we can throughout the application period and throughout this entire program. So with that, please get your questions in, and I look forward to seeing your applications, and we look forward to this program getting off the ground. So with that, thanks a lot, and we will close it out. And this is recorded. We will post the recording, and the slide deck will be made available on the program website.